Imagine waking up tomorrow morning, grabbing your coffee, logging into your bank account, and just seeing a zero. Actually, you know what? Worse than a zero. Imagine seeing that the life savings you spent decades building, the money for your retirement, your kid's college fund, your entire safety net, has just vanished completely into thin air. You didn't make a bad stock trade. You weren't robbed at gunpoint in an alleyway. No, you were systematically, ruthlessly deceived by someone you trusted, someone who looked you right in the eye, shook your hand, and sold you an absolute illusion. Look, this is not a nightmare. For thousands of Americans every single year, this is a devastating, cold, hard reality. According to recent FTC and FBI statistics, Americans are losing staggering amounts of money, literally billions of dollars annually, to investment fraud. The perpetrators? They don't wear ski masks. They wear tailored suits, they have slick professional websites, and they use all the right buzzwords that make you feel like you're finally getting in on the ground floor of something huge. But what you're actually doing is funding your own financial ruin. $160,000. That is the exact amount of money completely wiped out in just a few months in the case file we're opening up today. Welcome to the Fraud Files, where we expose real scams and protect Americans exactly like you. Today's explainer could literally save you thousands of dollars, maybe even your entire life savings. Because the terrifying truth about financial fraud is that it doesn't just happen to the naive or the greedy, it happens to doctors, it happens to lawyers, teachers, and people just like you who are simply looking for a legitimate way to build a better future. The scammers, they are banking on your trust, your hope, and your lack of awareness. So let's get right into it.
To truly understand the devastation of this crime, we need to look at a real-world scenario pulled straight from the official government files. Let's trace the betrayal of two investors, Tiana and Simon. So, in January, a promoter approaches Tiana with this seemingly incredible opportunity. He promises her a guaranteed 10% return every single month. Now think about that. 10% a month is absolutely astronomical, but the promoter is incredibly convincing. So Tiana takes the leap. She invests $100,000. Over February and March, the promoter actually delivers. Like clockwork, Tiana receives a $10,000 payment each month. And right here, this is the deadliest part of the trap, the proof. Because Tiana is actually seeing that cash hit her bank account, she doesn't suspect a thing. In fact, she's thrilled. She tells her friends and colleagues about this amazing opportunity. Enter her friend Simon. Simon sees Tiana's success, he trusts her, and in April, he invests $100,000 of his own money. The returns continue for a brief moment. But then, May arrives. Tiana and Simon hear absolutely nothing. The payments just stop. They try to call the promoter, but the phone number has been completely disconnected. The promoter has vanished. The devastating reality? That promoter was just paying Tiana with her own money to build that trust. Ultimately, Tiana loses $70,000, Simon loses $90,000, and the promoter? He walks away with $160,000 in stolen cash. This brilliant, devastating timeline perfectly illustrates how scammers manufacture that deep trust before completely pulling the rug out from under you.
Section 1. Anatomy of a Ponzi Scheme. The mechanics of deception. Okay. To protect yourself, you need to understand exactly how these criminals operate behind the scenes. You need to know what this scam is called, how it's structured, and the deep psychological tricks these criminals use to part you from your hard-earned money. This specific type of fraud is called a Ponzi scheme. It's an investment fraud where returns are paid to earlier investors using the capital collected from new investors. Let me be very, very clear about this. There is absolutely no actual legitimate profit being made. There's no real economic activity happening anywhere. There's no secret trading algorithm, there's no revolutionary real estate deal, and there's definitely no cutting-edge artificial intelligence making millions behind closed doors. The entire business is a ghost. The only money moving around is the money being actively transferred from the pockets of new victims to the pockets of older victims, and of course straight into the offshore accounts of the scammer. They're selling you a complete illusion. And you know what the truly unbelievable part is? This exact playbook hasn't changed one bit in over a century. The name itself comes from an Italian immigrant named Charles Ponzi. Back in 1919, in Boston, Ponzi claimed he found this clever loophole using international postal reply coupons from Spain. He promised investors a staggering 50% rate of return in just 90 days. But here is exactly why he became so wildly successful. He actually delivered those returns to his very first investors in just 45 days. Word spread like wildfire. People thought he was a brilliant financial mastermind. But the reality? He wasn't making any money on stamps. It was way too much trouble. He was simply paying the early investors with the massive influx of cash coming from new investors. By the time the scheme inevitably collapsed in 1920, he had taken in $15 million, which was a staggering, astronomical fortune at the time. Thousands of people were completely ruined. Today, obviously, the postal coupons are gone. Modern scammers use buzzwords like crypto assets, forex trading, AI algorithms, or exclusive offshore funds, but the underlying mechanics, they are exactly the same. Every single Ponzi scheme follows this exact four-stage fraud cycle. Stage 1, the hook. They promise unusually high, consistent returns, often claiming there's little to zero risk. Stage 2 is the recruitment phase. They constantly need new money flowing in to survive, so they often target tight-knit communities. We're talking church groups, social clubs, tight neighborhoods. This is a tactic called affinity fraud, and it relies heavily on exploiting pre-existing trust. Then comes stage 3, the illusion. As we saw with Tiana, this is by far the most dangerous stage. They actually pay the early investors. This builds a deadly false sense of legitimacy, causing those early investors to enthusiastically recruit their own family and friends. And finally, stage 4, the inevitable collapse. Because there's no real profit being generated anywhere, the scheme mathematically must fail. When the supply of new, gullible investors finally runs out, or when too many people get spooked and try to cash out at once, the whole house of cards violently comes down.
Section 2. Ponzi versus pyramid schemes, clarifying the crime.
Now, before we move on to how you can actually spot these criminals out in the wild, let's clear up a really common misconception about financial crimes. You probably hear the terms Ponzi scheme and pyramid scheme tossed around and used interchangeably all the time. But for your own defense, you really need to know the difference. Here's how they differ. In a Ponzi scheme, you, the investor, falsely believe you're investing in a legitimate functioning business or fund. The fraudster handles everything. You just hand over your money and wait for the supposedly guaranteed checks to roll in. You aren't required to do any work at all. In a pyramid scheme, however, the structure is completely different. You are explicitly told right up front you must recruit new members to earn any money. You usually have to pay a pretty hefty fee just to join, and your profits are directly tied to bringing more and more people into the fold beneath you. Now, both are incredibly illegal. Both require a constant, exhausting stream of new victims, and both will absolutely ultimately result in you losing your money. But in a Ponzi scheme, the illusion of a silent, working, highly profitable business is the core deception. Section 3. 6 red flags of fraud. Your warning signs. If you're watching this right now, take out your phone and screenshot this list immediately. Seriously, these are the 6 ultimate warning signs of a fraudulent investment. Recognizing these red flags is your absolute best defense. If any investment opportunity has even one of these red flags, you need to walk away immediately. First, suspiciously high or guaranteed returns. Look, in economics, there's a fundamental rule called the risk-return trade-off. High returns always mean high risk. If someone guarantees you a 10% monthly return with no risk, they are lying to your face. Second, overly consistent results. Real financial markets go up and down all the time. If your investment is magically reporting steady, positive gains every single month, even when the stock market is crashing, that artificial stability is a massive red flag. Third, unregistered investments. Legitimate investments must be registered with authorities like the SEC or state regulators. Ponzi schemes almost never are. Fourth, unlicensed sellers. Real financial professionals actually have to be licensed to sell securities. Con artists are not. Fifth, secretive or overly complex strategies. Swindlers will tell you the details are too technical for you to understand or that the information is classified. Don't buy it. If you can't understand exactly how it generates money, do not invest a single dime in it. And 6, difficulty receiving payments. When you finally try to cash out, suddenly there are paperwork errors or you face severe pressure from the promoter to just roll over your profits and reinvest. That's simply because they don't actually have your cash. And this brilliantly illustrates their absolute favorite psychological weapon, high-pressure sales tactics. Buy now because tomorrow will be too late. Don't be a fool and miss out on this. When this goes public, people will be lined up around the block. Scammers deliberately create a completely false sense of extreme urgency. Why? Because they do not want you to stop and think. They do not want you to take the time to read the fine print. They certainly do not want you to go talk to a financial advisor, your spouse, or a lawyer. Washington state financial regulators actually warn that shady promoters might even offer to send an express delivery service to pick up your check immediately. They want your money before the logical part of your brain can even kick in. Listen to me, if you are ever being pressured to make a split-second decision about your life savings, you are almost certainly dealing with a fraudster. Section 4. How to protect yourself, building your defense. Now that you know their exact playbook, let's move into the defense phase. How do you actively protect yourself and your family from these predators? What are the actionable, concrete steps you can take today to ensure your hard-earned money stays exactly where it belongs, with you? Here is your 6-step defense playbook. First, verify everything. Never, ever take a promoter's word for it. Check the SEC's Edgarta database in the US or the ASIC professional registers in Australia to see if the seller is actually licensed. Second, do your own independent research. Go online and search the company's name alongside words like scam, review, or complaint. Third, never buy based on rumors, hot tips, or inside information. Not only is trading on inside information highly illegal, but it's exactly how scammers lure in victims who think they're somehow getting an unfair advantage. Fourth, ask questions, lots and lots of them. A reputable investment professional will gladly explain every single detail to you in plain English. If they dodge your questions, you need to dodge their investment. Fifth, consult an independent third party, like a trusted CPA or a lawyer, before you sign anything. And sixth, never rush. Demand the time to review documents at your own pace. A legitimate deal will absolutely still be there tomorrow. But what if you're watching this right now and a pit is starting to form in your stomach because you realize you, or maybe someone you love, might already be caught up in a Ponzi scheme? You need to act immediately. Report the fraud. In the US, go straight to reportfraud.ftc.gov or contact the SEC and the FBI's Internet Crime Complaint Center at ic3.gov. In Australia, report it directly to ASIC. Now, I have to give you a harsh, honest reality check right now. Are these scammers getting caught? Yes, they are. The government is constantly cracking down. Bernie Madoff was caught after orchestrating a $65 billion fraud. Alan Stanford went to federal prison for a $7 billion scheme. But the brutal reality of this crime is that by the time a Ponzi scheme is finally exposed, the money is usually long gone. It's already been paid out to early investors to keep the illusion alive, or it's been hidden away in untraceable offshore accounts. You may never see a single dime of your money again, and that is exactly why prevention, education, and extreme vigilance are your only true protections. It all comes down to the oldest, truest, golden rule in finance. A rule highlighted in every single financial regulation document we've reviewed for this case file. If it sounds too good to be true, it probably is. Let's be real. No honest business is built on quick, astronomical, guaranteed profits without any risk. Let this phrase echo in your mind the very next time someone offers you a secret, risk-free path to immense wealth. I want to leave you with this really provocative question to ask yourself today. Are your investments truly secure, or are you unwittingly funding the next massive Ponzi scheme? It is time to look hard at where your money is actually going, who is actively managing it, and what promises were originally made to you. Don't let your life savings become just another tragic statistic in the fraud files. I urge you, right now, to share this explainer with your family, your friends, and your community to protect them from these devastating traps. Subscribe to the Fraud Files for our regular daily scam alerts and deep dive case files. Comment down below if this has ever happened to you or someone you know. Your story could be the crucial warning that saves someone else's financial life. Stay alert, stay safe, because the fraudsters are always watching. But now, so are we.